If I look at the financing needs of the region, they're huge, of the CEE region and actually of across emerging markets. So it is actually imperative for us to work with other private sector institutions and investors. I think that's key. In addition to being a big investor and advisor, we are actually one of the largest mobilizers bringing in private sector funding. Perhaps a few words on how we actually do this. So key for us is to de-risk projects and thereby making the risk reward attractive for private sector investors. I think first of all, I want to say I think it's excellent news to see how much the green bond market has been grown. I think as an investor community, we can be quite pleased with that. We can be quite proud. So we've come a long way. However, I think there is a far longer way to go. And I think some of you may have seen in the latest IPCC report, that's the Intergovernmental Panel on Climate Change. They issued a landmark report in October last year. And it's actually a sobering, or I almost want to say a chilling bottom line, very much based on evidence, making clear that the world has about a decade perhaps to stabilize global warming, otherwise there are disastrous effects. I sometimes wonder if everyone has really taken this in, and so I think how we look at it, and personally I would say for me time is to change is now. I think this is probably one of the hardest problems the world has faced and we need to tackle. I think as a global community we need to work together. Our green bond program is actually growing. We expect to grow it further, and considering again the need that is there, we will really make an effort collectively, I hope with everyone in the room, to focus on this and keep growing.
So we are in a very good place. I think that's something to be celebrated in the sense that these economies have seen sustained growth over the last, since the global financial crisis. A very, very significant decline in unemployment, an increase in per capita income in real terms, which is 20% higher than they were prior to the onset of the crisis. Now, what we are seeing today is this sustained sort of cycle of upswing or of growth has started to taper off. It started to moderate. One of the things that is probably the most important on the risk radar today is the trade tensions. And my colleagues in Washington have been toiling over this a lot to see how they would transmit to the global economy, the tensions, of course, between China and the US, and the trade war, which is, some would argue is underway, some would argue that we are on the brink of it and would turn back. I think the important points here are that there is the tariff and the non-tariff barrier increases of the trade war, but then there are the impacts that come out from the confidence fallout of that trade war. And I think those negative confidence fallout effects are much greater. On monetary policy, I think things are a bit more tricky because everybody watches inflation and says, well, there's no serious threat of inflation in this region, so why are we so worried? I think some of the things that one should keep in mind are that that is correct in general, but there are rising wage pressures. And we also know that there are lags built into these economic processes, that they eventually show up. Our advice on that has been the central banks should be careful. They should be data dependent on reacting to through their monetary policy reaction, and communication is very important. EBRD had a very interesting chart in one of their flagship reports, which was to do with how have patenting changed over time in these countries relative to how much they have advanced on the value-added scale on exports. And it is very startling to see there that the Central European countries are the only ones that are actually seeing a decline. Really? So the innovation dynamic needs to pick up in the region. They have the human capital, they have the education base, and I think that's possibly an area where they could invest.
We are now operational for more than 20 years, and our business model is rather simple. It's indirect. So we work with partner banks, we work with partner GPs throughout Europe. But in order to partner up, you have to understand your counterpart's business. And this is why we go very deep in our due diligence on day one. I'll give you an example of a bank. If we are being asked by a bank to provide a guarantee for SME support lending, we would do a proper due diligence on the bank's ability to do lending in the sense of how do they do lending? How is the risk management set up? How is the reporting mechanism set up? Because we don't want to interfere in the day-to-day business of the bank. We like the bank to continue the normal course of business. 2019 for us obviously means the deployment of FC2, which is the second leg of the Juncker plan. And indeed, I guess the member states have made it quite clear, said, Mr. Juncker, your plan is super and great, and we vote for the extension, this is all in favor, but we would like to see more capital in particular Eastern Europe. That has been quite clear. On top of it, what has been very critical and close to our heart is the Western Balkan 6. For this, we have particular budget lines from the Commission, and again, together with like-minded IFIs, and some of them, they're sitting here, like the Austrian Development Bank, like the EBRD, KfW, etc. We have developed a very powerful platform, which is a provider ranging from technical assistance to equity investments in the region. And this has been not only powerful, it's been very successful, and we hope that the Commission is further entrusting us money to support this platform.